Today we have an interesting panel of experts. We're going to discuss the importance of understanding local payment landscape in global expansion. So I'll get our panelists to introduce themselves. Mika, can I start from you?
Yeah, hi, my name is Mika von Hartmann. Been in Thailand all my life, 20 years in the payment space, basically working for a merchant acquirer here, one of the top 5. Plus also I'm the ambassador for Thailand for Emerging Payments Association Asia, which is a membership organization that wants to facilitate technology, payments information, networking events, and also policy influence on the payment space, especially in Asia.
Great. Andre.
Hi, thank you so much, Melody, for inviting me and sharing my thoughts here. My name is Anjuum Khanna, and I represent a company called WadzPay. We are a payment solutions company. We're into offline and online payment solutions, and I head their enterprise sales into acquisition businesses.
Paul.
Thank you. So my name is Paul Fiet. I head about cross-current solutions for JP Morgan APAC. So it's a very strange animal I am, because I'm both in trading as well as in the payment business. I'm really looking more FX end-to-end, which I think a lot of clients are looking for nowadays globally, how to move cash as well as look at the foreign exchange risk.
Amit.
Hi everyone, thank you IFX Asia for having me here. I'm Amit Malik, I work for WadzPay. We are a Singapore-based fintech into blockchain payments. I look after Japan, Asia, Pacific, Australia for them, and it's great to be here.
Thank you, Aaron.
Hi everyone, I'm Aaron. I'm from Unlimit. We are a payment company based in UK. I myself am based here out of I'm based in Singapore, and what I do is I help to build the payment infrastructure for Unlimit here in Asia.
Great, thank you for the introductions. So Aaron, maybe start from you. Can you share a recent experience that your company expanded into a foreign country with us?
I think here at Unlimit we are laser focused with our expansion plans in Asia, and most of the time we ask ourselves, in the country that we want to operate in, right? What are the kind of challenges that we face? And I think at the top of the list, the first thing that comes into mind is always about license and regulations, right? Whether or not the country that you want to expand to, do they require you to be licensed in order to operate as a payment company? Anyway, it's a rhetorical question because the answer is always yes. You always need to be licensed to operate as a payment company. So I guess the next train of thought would be, how easy it is for you to navigate through the local licenses and the local regulation scene, right? Do you understand the local AML and CFT policies? Do you understand the personal data protection policies? Like in Europe, you have GDPR, and in most of Asia, I believe it's PDPA, right? What about the associated taxes that comes along with it? And also, foreign exchange policies. So these are the things, these are the factors that you have to consider, whenever you plan to expand your payment company.
Great. Paul, I'm going to ask you, can you share with us your recent experience in expanding to a country?
Interesting enough, we haven't expanded as JP Morgan into countries for the last 100 years, I think. While there are rumors that we're going more and more into Africa, I think mostly a lot of our clients expand across Asia, across Europe, LATAM, and taking into account also what Aaron said about regulations, it's understanding the regulatory framework, how things are done, but also looking at how can you standardize as much as possible across the different countries, but then still have the local nuances and culture. And I think that's where it comes in. And we have a lot of European companies who, for instance, come to Asia and they still think they're in Europe. And then you will say, that's great, but if you go to Indonesia, people are just not used to paying across bank. Or if you go to Taiwan, you have still regulatory reporting, documentation, etc. Or even the other way around from a culture perspective. Take into account people in LATAM, China, India have a complete different culture compared to some of the other parts of the country. I mean, I always love when I go to India. My two esteemed colleagues here from India, they always love to negotiate accordingly. And it's a cultural concept where if you look, for instance, you go to the Middle East, you have to really much, it's more wine and dine accordingly before real relationships come into play.
That's very interesting. Today we're here in Bangkok, so Mika, I know you're a specialist here. Can you tell us more about the local landscape for payments in Thailand?
Yeah, well, what my fellow panelists mentioned about regulatory constraints is a big issue because the Bank of Thailand here is very strict compared to other countries like in Singapore. So here, I just wanted to share experience when in about 2016, when WeChat wanted to enter Thailand. What you had these payment processes from China coming in to open the service without any licensing. And so the Thai police were, using the news, and they were after them, and you had all kinds of, odd payment processing going on. So that's something that if you're going to come into Thailand, you obviously need to study very clearly the regulatory requirements and understand the process of getting licensed, because it doesn't take, a month or two. Normally, it might take up to 3 to 4 years to get a license to do payment processing in Thailand, and then plus all the additional licenses that you need. So that's very critical. Secondly is understanding the business model. That is, like for example, in Thailand itself, the margins are paper thin and getting even less and less each day we go by. And so that's something that when you come into the market, you need to understand that what your business model will be. Can you really survive on that? Because here in Thailand, it's price sensitive. Merchants have been spoiled by, many of the acquirers by giving, everything free of charge. So basically all the equipment is given free of charge, upgrades are free of charge, whereas in other Western countries, you'd be paying for that. Here, the merchant will say, hey, that bank gave me this free of charge. So you need to understand that very well, that you have a business model to survive in the market.
Speaking of the WeChat Pay and Alipay, how difficult do you think it was for you to educate the merchants and local business to get them, ready to use the new technologies?
Yeah, in 2015 when we launched, the digital wallets have really unknown in the world. Even in Thailand, nobody really knew what digital wallets were. So it took quite some time to educate the market to understand that the value of it. And with Alipay and WeChat, obviously you need to go and tell the merchants that, hey, we have, at that time it was 700 million users were using Alipay. So basically, you're not coming with a wallet that has maybe 1 million customers, but you're having 700 million. And during those days, Chinese tourists, the amount of tourists coming into Thailand was very high. And so with additional promotions from the wallets, Alipay would give promotions on top, maybe 5 to 10% discounts. It was a really incentive for the large merchants to accept that, especially with targeting the Chinese. So basically that really kicked off the digital wallet acceptance in the Thai market in those days. But it took time. But what took longer time was educating the regulator to understand what a digital wallet was, because they were really afraid about the KYC, the anti-money laundering conditions and stuff like that. So it took quite some time actually educating Bank of Thailand to know that, hey, that these are real customers and the risk was not as high as they thought it would. And then going to the merchant, and with that, it's been very successful in Thailand.
Great, thank you. That's very insightful. Speaking of the merchants and consumer trust, Aaron, for companies like Unlimited, how do you build this trust in new markets to get new users and get them to trust your products?
Sure. I think trust is by far one of the most important aspect in any business, right? But especially so in payment companies, and the reason is because usually, payment companies, it involves gathering financial information, sensitive personal data, and that's the reason why people, whenever they hear of a new payment method or a new payment company coming up, there's always this sensitivity, right? Should I give my banking information, or should I trust this company? users are a little bit more skeptical and cautious, when being introduced to new technology or a new brand. So I think in that sense, the lack of trust would, inevitably slow down the adoption of the users to your company. So that's kind of the risk here. Now, at Unlimit, so how we do it is whenever we are expanding to a new market, we are always constantly looking for a trusted and reliable partner that to work with locally. So it can be a software company, it could be a bank, it could be a digital wallet, it can even be a local payment company, right? Now, when we look at the potential partners that we work with, there's always a list of criteria, right? And at the very top of the list, right, and you can always, you will probably hear this very often from me, it's always about their risk and compliance policy, right? Whether or not the partner that we work with is regulated and able to do the things that that we will be doing, right, in payments. So, once we ascertain the partners that we would like to work with, then the next step will be onboarding, right? And I don't know, for the benefit of the audience, I don't know if you know, whenever a financial institution would like to work with another financial institution, the KYC process, the onboarding process, the paperwork is just mind-blowing, right? So shout out to all the legal and compliance folks out there. I don't know how you do this on a daily basis, but the amount of paperwork, can take literally from months all the way to up to a year just on onboarding itself. So, but at the end of the day, sometimes I question myself, like, why are we going all the pain and the process of just to onboard a partner? And I realized that at the end of the day, it's really not for the payment company. It's actually for the customers, because we want the users who come to our payment page, our platform, to make the payment, to have a peace of mind that the transaction that they will be making will be sent securely to the intended party or the intended beneficiary. And for our clients, the merchants and the businesses who work with us, we want them to have a peace of mind that their funds, their money will be received, right, securely in one piece. So I guess that's how we build trust with our partners.
Thank you. Moving away from customer trust, Amit, can you tell us how WadzPay differentiates itself from local competitors when you launch new products?
That's an interesting one. So I think whenever we look at the market, whenever we look at what we want to do in a market, and once we've done the scope and the study, the first thing we would look from a differentiating standpoint is build a strategic partnership in that market. So we look at whether it's the government body, whether it's a financial services institution, whether it's a fintech, whether it's a telecom company, who's our strategic partner in that market. And it's important to have that strategic partner, because while we bring in the global expertise and the solutions, the strategic partner is important for us to tell us about the local regulation, the local compliances, the need of the customer, and understands the customer set. So I think that's the first part that we would do. The second part that we would want to differentiate ourselves is by the solutions that we bring in. From a blockchain perspective, which are flexible, which are very, very secure, which are compliant, which should be compliant as per the law of the land. That's what our focus is. And also have a lot of security from a customer standpoint. The third thing that we differentiate is we are interoperable. So, we are agnostic of the chain that, we would want to be. So that's something, and scalable. So these are the three factors that we bring in when we look at a market with a local partner.
So WadzPay expanded quite fast in the past few years. Can you share some examples of how your company has adopted these solutions based on the specific regional needs of a particular market?
Yes. How much time do I have? Okay. No, I think I'll just keep it brief. See, when we look at the market, we look at our product suite. So, let's first take as tokenization. So when we look at a market, while we have loyalty tokens, we have special purpose tokens, we have RWAs, which is real world assets for those who don't know, from a tokenization. But let me give an example of Indonesia as a market. So, when we looked at Indonesia, we had a local partner. we realized that there are over almost 700,000 pilgrims that visit Indonesia every year from Indonesia to Saudi Arabia. That's the Hajj and the Umrah. And as we all know, Saudi Arabia is big on going cashless by 2030. So we took that whole issuance side in Indonesia, acceptance side in Saudi, the whole issue of cash trading between the two countries. We did a closed loop pilgrim solution which we are offering in piloting. That's from an Indonesian market standpoint. So again, you see a flavor of a local partner on the issuance side, a local partner on the acceptance side, us providing technology and trying to solve an issue which is very important from a country standpoint, from a customer standpoint. Similarly, when we look at our wallet proposition, we've partnered with a firm in Vietnam to offer a digital asset wallet to their customers. Right. Similarly, from a programmable money standpoint, we are working in the African continent with a telco, to see how we can help them with programmable money, because Africa there is an issue about money and we all know that, right? So the programmable money works there. So depending on the region, on the territory, we would offer solutions with a local partner.
Great, thank you. Now let's turn to WadzPay. Given its role in assisting international business with payment needs in India, can you tell us the key difference between India and other APAC regions in terms of its payment landscape?
Okay, so regulation is a buzzword. WadzPay is no more a local player now. We are international. So while we are regulated heavily, when it comes to India, when we move outside India to countries like Indonesia or Malaysia and Singapore, it's not too stringent. So we see both the worlds. But let me break this question into three. One, the difference. Two, how is India different, and third, the benefit for any international player coming to India. So see, there's a saying in India that every bank wants to become a fintech and every fintech wants to become a bank. And why is that? Because everyone wants to be regulated, right? Every fintech wants to be regulated because they don't want to come, under the situation of an embargo. So they want to work under the norms. But for international players, like, we work with a lot of international players, Zara, H&M, Etsy, Zalora, all these are international players. But when they come to India, there is some pain, right? They go through card tokenization, which is very different in India. They go through a stringent KYC norms. For some of the international players, like in India, crypto and betting is very heavily regulated. So KYC norms are very stringent. Data localization is another thing which is little different. When it comes to India, you cannot take the payments data out of India. So payment landscape is heavily regulated, very different. But then, for an international player coming to India, look at the benefits that he's getting. The base of the pyramid is so huge. You get access to 1.4 billion people. And, the consumerism is high as of now in India. So yes, so, what I was telling you was, I know there is pain, but we should always look at the brighter side.
In assisting international business or merchants to settle in India, can you share with us your thoughts on SME adoption to payments and use case of new products online or offline in India?
Awesome. Like Amit said, how much time do I have? Because that's what I do. That's my bread and butter. So let me talk about from the point of origination, incorporation of a company, to a point where a company is successful. We WadzPay, we help, and not just us, right? A lot of fintech companies. So we help company incorporate. We call ourselves a money movement company. So we move where the money moves. So from the time of incorporation, we have something called WadzPay Rise, which helps a company to incorporate, and then also helps in some funding from, let's say, managing payroll. When they go a little big and they want line of credit, we provide them line of credit. We have BNPL solutions, buy now, pay later. So for SMEs, we have understood the pain. And I think it's more outward in rather than inward out. So we build products which we know are to be used by the SMEs. And SME, if you see, in India today we have close to 65 million SMEs. And out of these 65, 50% of these SMEs use some sort of, payment product, either offline, which is point of solution, or an EDC device, or an online. If they don't have a website, they use payment link, payment pages. If they have website, then they use a payment gateway. And when they use a payment gateway, let's say another big problem of an SME is return to origin, right? Because in India there's something called cash on delivery. So you order, and when the article comes to you, you deny. So you have heavy, RTOs. We build products which reduces RTO. We have product called Magic Checkout. We have product called two-click checkout. Okay. So all these products are built for SMEs, and I believe we have just scratched the surface, right? It's going to be huge.
Thank you. That's very insightful on the SME adoption. So we talked about the importance of understanding the local payment landscape, but now we have to explore further on the cost and the resource a payment company needs to invest in understanding the local payment landscape. Can someone share with us, what are the main resources or how much you need to invest in understanding those local things?
I take it as a bank. I think the first thing is there's multiple models you can go with. One is direct, which can be very costly, and especially if you're a payment fintech, there are countries for the real-time payment rail. You have to go yourself. You have to put capital down, the technology resources, which is heavy investments. Now, there are certain benefits because at the end of the day, you not have to pay any third-party provider who does all the infrastructure. The question really comes in, is that going to be your core business? Or is your core business connecting your clients to different payment methods and you utilize third-party providers, could be banks, could be other fintechs, to support those payment methods? And it comes all to commercials. So I'll give you an example, and similar, like we, as JP Morgan, we're like the bank for the banks, but we also do a lot of the fintechs itself. It always comes to what do you do yourself? What is the cost you're paying someone else? And what is your competitive landscape? And we had a very interesting discussion 2 weeks ago in India about real-time payments. Because everyone talks about real-time payments, but nobody talks about the real cost and the capital that you need to put up, especially for weekends, holidays, for cross-border real-time payments. Because foreign exchange, it's closed. You can't get foreign exchange settlement Saturdays, Sundays. And unfortunately, we don't foresee it's going to change the next coming 20 years because it's not just the banks have to change, the regulator has to change, the monitoring system has to change, which is different than a payment flow. When foreign exchange, it comes into much more further impact on the economy. So it all comes back to what is the volume, the clientele, the client experience you want to put forward, as well as the benefit itself. And even there, if you start looking at cross-border remittances, especially in the, I would say, C2C space, we start seeing more and more of our customers now offering real-time at a higher cost, same day, T+1, T+2, because most of the customers, they don't really care about real-time delivery. They care about the cost itself, but they want real-time delivery because they don't trust the company they're working with. So the first 5 transactions they do, they're going to check, did the money arrive immediately? After the 5th time, it's all about cost itself. And that's really where it comes into play. And it's the same thing with when we do investments and we start looking at, the trust factors. That's really where the case comes in. And then, of course, also how unique do you want to make the proposition? And how much do you want to be able to manage returns, issues, etc., and with the right partner accordingly. So I think it really comes into that instead of just looking at the cost. Because I think each corridor, each payment method has benefits, but also cost. And it's the same discussion we see, for instance, with the broker-dealers that support credit cards. They're okay to get charged 2.5% because their customers want to use credit cards. At the same time, you still see people are pushing for real-time payment methods because of the cost reduction is for them. But for me, for instance, personally, I love to use my American Express, which everyone hates because it gets charged 3.5%. But I like my points. So if someone accepts credit card, I use credit card. And it's not because the payment method, etc. It's pure because the benefit I get utilizing it.
Maybe let's explore this a little bit further in terms of Thailand, like payment preference and behavior. How does that impact on the success of a foreign company expanding to Thailand?
Well, talking further from what we were discussing about, what is key success, or what is your focus. I mean, for example, here I just wanted to mention on, many of the smaller SMEs now, they don't bother making their own website because the core money is actually moving on Shopee and Lazada and TikTok and Facebook. So they don't bother, dedicating their resources on that. So many, they just go, okay, let's just onboard onto, those platforms, and the marketing spin and the promotions, etc. they have on there. So then they lower their cost that way. But actually, in the end, they actually increase their costs, because now Lazada and Shopee, they're up, increasing their fees almost, overtaking, the credit card fees and payment fees already right now. But I think, you need to understand, in Thailand itself, if you look at the large merchants, obviously they are keen to provide, full payment services, whatever. But then when you get down to the SME and the lower, smaller merchants, their key focus is really on cost. That's it. So here in Thailand, what you'll see is that if you go to the street stores or the shops even selling, like your suits, etc. If you're going to pay with a credit card, they'll say, "Oh, I'm going to charge you 3% on top," right? That's what they're going to say. Or then they say, "Oh, if you don't want to pay that, then you can pay by prompt pay." And the end, what happens is that many people in Thailand, they just pay by prompt pay because it's given. Now it's the QR codes are everywhere. So what I see right now, I just wanted to share this, that there are many wallets or players outside of Thailand who come into Thailand, and they want to enable tourists to be able to pay on prompt pay. But it's not really allowed except if you're a tourist from Singapore, Indonesia, Cambodia, Philippines, Malaysia, and Laos, that you can do that. But they're from Europe and the US. There are many now who want to be able to pay at prompt pay merchants. So it's something that is developing right now, that even the tourist end that are coming inbound, the cross-border, they are very keen to pay because they don't want to have cash in their hands. They also want to hopefully save on FX, obviously, your business, and that's what they want to do, and that's what's happening, developing right now. So the many players, and actually the Bank of Thailand will be soon issuing policies how they're going to handle that with aggregators who can actually provide that service and also enable that for that. I mean, UPI is going to be opened here probably within the end of this year. Okay, this is not official, but it's just something that we all know is under discussion, that the Indian tourists who are coming here will be able to pay at the prompt pay. And so that's very interesting for all these small shops. If you go to Chatuchak Market and all that, they're very keen on that.
Hi, Melody. I have something to share. Well, Mika has stolen my thunder by talking about UPI, but I was talking about cost. It's such a revolutionary product. See, demonetization was a huge disruption for our country, and if there was no UPI, then we would have gone down to dogs. But because of UPI, look at the adoption that Indian consumers have taken to UPI. Today, most of my SME players or even the customers pay through UPI. They don't use cards, and it's a bad situation for Master Visa in India, because I'm sure you'll agree, because it's the volumes are going down, and I think if I'm not wrong, I think we processed somewhere around 1.3 trillion US last month. So that's the monthly number that we have, and it's going berserk. So yeah, so cost, and UPI is free. I don't know if UPI is being charged in Thailand or if there is some cost, but there is a situation where I have to ask customers to pay me AWS fees because the entire platform fees is zero.
Let me just add about that because it's a discussion that I think, we've been part of the discussion, and you were also in India, but it's a discussion globally actually that the concept of the account to account or real time payments is good for the merchant because they get the funds immediately instead of end of day or T+1, cross border T+2 some cases, right? And so that's something that I think all regulators are in discussion. In some countries, actually, it's already written in the policies, like in Malaysia, that there actually is a fee, but it's not being charged currently. In Thailand, possibly there would be a fee in the future. I think that's something that, who's going to bear all the cost? India, the government is bearing part of the cost, right, because it's, subsidized. Here, the banks are bearing the cost. But in the end, it's going to come to this case that, most banks like yourself, we want to have at least cover the cost.
Just on the cost itself, because everyone talks about it, at the end of the day, someone has to pay for it. And I think or the retail person pays for it, or the SME pays for it, or someone pays for it. At the end, it's someone, there is a cost. And it's always interesting when you talk about real-time payments. And I still remember in Europe, when I'm originally Dutch, and we had real-time payments in 1990 already. And we don't have checks I didn't have touched a check in my entire lifetime till I moved to Asia. But there's still a cost, and especially with the cross-border stuff. Now, the difference is customers don't see it perhaps as a fee. They will see it perhaps in the FX spreads accordingly, because you have to pay for the technology, you have to pay for the service. So somewhere the cost comes in. And it's very easy for the regulator to say, let's do not zero cost. And I think the other issue that we see with a lot of the regulators is that payments and foreign exchange are two complete different teams. They don't talk to each other, and the policies do not align to each other, which makes it much more difficult when the regulator, or even when I was talking to the Bank of International Settlements, a payment is very simple. But when you start adding the foreign exchange component, the regulatory, the restrictions, the way it impacts your economy, it becomes a complete different animal. And unfortunately, a lot of the regulators have not really seen the two different industries connected. Same as the banks, we have all the same issues. FX trading, which I'm part of, as well as payments, it's a complete different business, a different thing of how do you think about it, what do you do? And now it's really connecting the two, which is completely new. So I think that's really where the next step comes into. And I think, even while regulators want zero cost for real-time payments, unfortunately, all the banks are mostly public companies, private companies. We're not, nationalized, etc. So that's where, at the end of the day, we'll have to think about our shareholders.
Thank you. So looking ahead, maybe Amit, if you can tell us what future trends are you currently keeping an eye on in terms of the APAC region payment landscape, and how are you going to adapt your solutions to those changes?
I think the trends that I'm very excited about is peer-to-peer payment. Everyone talks about it. I think that's something that's really going to go big, and especially from a region standpoint. But if I was to look at outside the region, globally, if I was to look at a trend, I'd keep my eye out for the CBDCs. The Bank of International Settlement just released a report saying roughly around 125 odd countries are toying with the idea at some stage. And as they say that by 2030, at least 15, 16 retail and anywhere between 6 to 8 wholesale CBDCs would have been launched. So I think that's a space that's going to become very disruptive, both for traditional payments and for new age fintech payments. I think that's the trend that I'd really keep my eye out, irrespective of who I was.
Thank you. Aaron, what's your view on those?
So I want to add on to Amit's take on CBDCs, right? But instead of CBDCs, I want to discuss a little bit about stable coins, right? Stable coins between financial institutions. I think that's something that I've been, keeping an eye on recently. So right now, I think Paul previously mentioned that, when payments are easy, right? But whenever foreign exchange comes into play, it becomes a totally different beast, right? And I myself, I mean, personally, I'm a bit optimistic when stable coins come into play between financial institutions. When we settle money, it will be, I guess, hopefully, it will make things better, quicker, safer, and more secure for everyone. So in that sense, costs will be driven down, and yeah, probably stablecoins should be something that we should look forward to.
Mika, any thoughts from you in terms of future trends that we should keep an eye on?
Well, what I wanted to share is in what we see in the region is that all central banks want to control money. Obviously, there's many ways to control a country, either by military or by government, whatever. But definitely, money is one of the big things that it's not people really think about. It is that central banks want to control that, and that's something you see in Asia a lot. And also, geopolitics is obviously a big issue, with sanctions and things like that. And what we see is also that many of the central banks, they want to be more in control of their local currency. And that's why the central banks are not too excited about cryptocurrency because it's out of their control. I hear many people say, yeah, cryptocurrency is great. It has its use cases. I totally agree with that. But if you imagine Thailand would move to cryptocurrency totally, what would happen to the Thai baht and all the valuation in Thailand? It doesn't work out that way. So it's something that we see. And plus what we see is that there's an effort to lower the cost, obviously like, account-to-account real-time payments, cross-border, to make it more not needing to rely on other countries. Because currently, a lot of the the payment systems, all the card systems, they all have to go through somebody who is not in Thailand. So the Bank of Thailand wants to have more control of that. There's a plus and a negative to that. Some people say about privacy, about there's a previous discussion about government knowing all what's happening. Well, actually, they already know. I mean, to be honest with you, because all banks need to send a report anyway. So it's not related to CBDC. Some people were mentioning that previously, and that's not the case. Currently in Thailand, all our transactions need to be reported to Bank of Thailand, so they see all of it anyway. So, end of discussion of that. But anyway, I think that there's that trend to lower the cost, find it easier for the merchants to transact, make it more seamless, more interoperable, especially in the Southeast Asian, the ASEAN region. There's an agreement already, and Project Nexus, which hopefully might come out to have a more integrated plan instead of having a bilateral agreement. Will help to unify the payment here. So I think that's something that's happening, especially for Thailand and in the Southeast Asian region.
Thank you. Given the time restraint, the last question that I'm really interested to ask, because we have 5 payment providers here, what's the piece of advice you will given to a merchant in selecting a suitable payment providers?
Let me go first. Okay, good one. So, see, the future is very optimistic, and for merchants, when we acquire a merchant, for me, the competition is cash, not another payment provider. So I always tell a merchant that come to me when you see I am moving your money, in all the aspects of your business. Or when you are, when we go and when we acquire a merchant, this is what our pitch is. So we become a money movement platform. We are not just a payment gateway, because in future, I don't think a customer or a merchant would be willing to pay a 2% or a 2.5% of an MDR fees, right? He would use things like a UPI or a QR, which are lower in cost, and a same-day settlement. So he would rather pay for the value-added services which are coming with the payment gateway or the offline solutions, rather than paying a 2.5 or a 3%. And similarly for the cross-border solutions. So for a merchant, it's better to go to a payment provider who is giving him all the 360 degree payment solutions, and not just a payment gateway. Like, in RazorPay, we have converged the online and offline. So you can book online, pay offline. You can book, or you can pay part online and pay the remaining on the store, right? So we have done the convergence. So now a merchant, when he would look at me or he would look at someone else, he would always look at the positive differentiations rather than just an MDR.
Thank you. Paul, one piece of advice.
Good question, because besides in the US, we mostly support all the payment companies. So to tell a merchant who to choose is almost telling, choose all of them. We don't really care, because at the end of the day, they still need a bank to move the funds. I think, and rightly to the point, it's really on what added value can they bring. Price, of course, is important, but think about also how much security can they bring. Downtime, is there any downtime? What is the procedures of downtime? What is the additional value services you need? And very much also, where do your customers come from? And one of the points, it's always interesting, and I talk to a lot to the clearing houses. And everyone talks about when we go to Europe, we're going to pay with UPI. Now, it's great if you go to a tourist city or you want to use PromptPay, etc. But a smaller merchant will have zero, I would say, benefit of offering 200 payment methods if one person from Asia comes there once a year. They will tell you use MasterCard, Visa, or use cash accordingly. And I think that's where we still are at the point that the big card schemes have still the biggest access across the globe. And that's why for everyone there's a place. It all depends a little bit on. And that's what you see, for instance, if you look at WeChat and Alipay, they made a great process on identifying where their customer, the wallet holders, went to, and targeted those merchants specifically to say, you have 10,000 Chinese coming every year here, you should offer WeChat Pay or Alipay. Now, it's also an economy of scale. India, you can do so. China, you could do so. With all respect to Singapore, 5 million people, doesn't really matter if you have 10,000 Singaporeans coming. It's a numbers game at the end of the day. So, but it's really understanding who are your customers, what do they accept, and very much what is the added value the payment service provider can bring to you.
Thank you. That's very insightful. I think we're reaching an end of our panel. It's a really interesting panel, and we covered a lot. I have checked with all of them that they will most of them will be at the night party tonight. So if any of our audience has any questions, feel free to grab them at the night party. That makes them having to go today. Thank you for joining us today. Thank you. Have a nice day.